Hey guys, this has been the Mortgage Guy. I wanted to reach out to everyone today. I wanted to go out to the folks that are looking to potentially sell their house this year and also agents that are looking to pick up listings or dealing with listings that they have right now. Some unique things are taking place in the market to try to counteract what we're seeing with interest rates going up. An example that came across my desk is something that's worth going over with everyone. A listing price of $300,000 on a home, and the sellers would traditionally try to pick up some activity by decreasing their purchase price. I apologize. Stepping back for $5,000, making the new purchase price $295. Now, if you were to find a buyer at a reduce of $5,000 on your purchase price, then what would that mean to the buyer? I mean, this is important information to just take into perspective. If you reduced by $5,000, you would be saving your buyer about $1,000 if they're putting 20% down on a purchase of $300,000 and they back it down to $295. They're now putting down $1,000 less. So you saved them $1,000 by reducing at the closing table. It also would reduce their monthly payment by about $29 a month, which would save the buyer $6,194.43 in interest over 30 years. Another strategy to consider if you're selling your home or if you're a listing agent out there is, rather than reducing your purchase price from $300,000 down to $295, you can also offer to buy a percentage point down in interest rate for your potential buyer. You leave your purchase price at $300,000. Now, if you were to influx $5,000 in seller concession to the buyer in order for them to have funds to buy their interest rate down, and they were able to purchase from, let's say, 7.625 down to 6.625, what would that mean to the buyer? Well, with those numbers, you're not saving them any money out of pocket at closing because you're not reducing their down payment of 20%. But believe it or not, with interest rates what they are, the reduction in the interest rate actually saves the borrower $162 a month as opposed to $29 a month. And that $162 a month equates to over $58,000 in interest over the 30-year loan. So it's the same to the seller, whether they reduce their purchase price by $5,000 or they leave their purchase price at $300 and influx $5,000 across the table to the seller. That's the tip of the day. Keep that one in your back pocket and give me a call if you have any questions.